All right, folks, I'm live here at the Money Show in Orlando. It is an amazing event. I want to bring it out from the Fitz-Gerald Group. Their principal, you know him very well, Keith Fitz-Gerald, along with Money Show editor-in-chief, Mike Larson. Let me start with you, Mike, because
sure.
You know, I've been coming to these since I think 98, 99, and I've seen it ebb and flow, and I feel something now. I feel another kind of energy. Retail investors, confident, excited. Are you seeing and feeling that?
Well, yeah, absolutely. I mean, you look at what retail's been doing this year. They're buying the dips and they're being rewarded for it, right? So you have that enthusiasm. You have Schwab talking about more retail accounts being signed up. I think they want to, they want to participate, and whether that's in things like crypto, whether that's in stocks, the participation is what matters. They want to educate themselves and they want to make money.
Speaking of which, the education part is what I think is phenomenal. What I think Wall Street underestimates. Keith, I remember you were really one of the few people, so-called Wall Street experts, talking about Palantir. I had the top software expert on Wall Street analyst on, and he said he didn't like Palantir because of the retail investing.
Oh, what a mistake that was.
I know, it's crazy, and this is a few years ago, but you were pounding the table on it, and the retail crew was there with you.
Yeah, and what a juxtaposition, because the retail money was the smart money here. Wall Street was stuck in their own spreadsheets, stuck in their own analysis, and stuck in the past. I think the company's got an incredibly bright future, even from these levels.
So, Mike, last Friday we sold off. We hit a bump in the road yesterday. Sure. Volatility picking up a little bit. How do you see the rest of the year going?
You know, we were straight up into the right for so long out of the Liberation Day low. I think it's only natural to catch your breath, take a breather, and see what happens. You know, we have these bank headlines that are percolating out there. We have gold that was running and reversing a little bit.
You see something nefarious with this gold move? Is it a reflection of the world that's going to implode, global debt? Something else, something really nefarious, and you want to be in gold? You
know, gold has been rallying with stocks. I mean, that to me seems more like sort of an easier money trade that's been going on, rather than everybody's hiding in gold for some big negative thing out there.
Another stock you're well known for is Tesla. Tesla is one of these names that Wall Street gives up on all the time. Of course, Elon Musk proves them wrong all the time, but now they're saying, listen, China's coming on with EVs. EV subsidies have been taken away. There's no way Tesla deserves the valuation that it has now.
I call that the yeah, but crowd, because yeah, but, we've heard that for years. Robots, data, energy, it's all there.
So, metals, we talked about that. We talked about the market, the bumpiness. The VIX, you say, stays elevated for a little bit.
Yeah, I think we're going to be in this environment where it's choppy. We've come a long way. We're heading into year end, and we just have to digest the gains we've had.
And you still think NVIDIA is a buy here?
There is no question in my mind it's a buy here, because the chips, the way this has to work, 86-7% of the market share, the next generation is already out there, and Jensen Huang knows exactly what he's doing.
So you're looking at Blackwell, then you're looking at Rubin, and then you're looking at the very next ones, and there's this old saying on Wall Street, trees don't grow to the sky, but trees aren't stocks, right? These are companies,
Bingo.
And they evolve, and so. What about other parts of the AI story, though? Are you concerned? The circular financing and things like that?
Well, the circular trading that everybody's talking about is very different than the circular trading of old. There's real revenue, real performance objectives, real stock ownership.
Where does the trillions of dollars come from?
In terms of AI?
Yeah.
It's the ancillary spending. It's going to be the more efficient gas station, the more efficient revenue, the margin expansion that comes
But like
from profit.
OpenAI themselves, they're like, okay, yeah, they're just cutting deals with everyone. Like I had a cousin who did that, but he went to jail. It's called kiting checks, right? But they're like, they've cut $1 trillion in deals, and people say, where do they get the cash from?
Well, they have to do the deals, because this is for all the marbles. If they don't, they won't survive. Every business on the planet will adapt, adopt, or die, Charles. So where the money comes from is earnings, margins, revenue expansion, units sold, better cures, better medicine. The use cases have expanded 100-fold.
And what are you telling, Mike, the folks then who are here, who've done very well, but every time they turn on TV, it's kind of, they hear someone say the market's too expensive, because everyone grapples, right?
Yeah.
Particularly the more successful you are, the more anxious you become. What are you telling them, and what are they telling you?
Sure, my big picture view for the last couple of years has basically been be bold. Be on the offense, whether it's the sectors you're invested in, allocations to stocks versus other things. And I don't think that really goes away. Again, I look at what's happening in credit, it's more like a DEFCON 4 or 5. This is not, great financial crisis all over again. So I stay invested.
What about the new things that are coming around? I mean, the evolution that's happening, robots will be soon. Now, obviously, Tesla's got you covered there. And some of these names, rare earths pop for a moment, quantum is popping. Are people looking for that kind of stuff?
People are asking about it. They're reading about it. They're seeing news. They're seeing these headlines. They want to know more. That's what they're coming to the experts like Keith and the others that we have here. And I think all we can do is educate them and hopefully they make the right decisions.
All right. Well, let's leave it there. Mike, Keith, thank you both very, very much.